So today's topic is embezzlement and how to spot the warning signs in your cannabis company. And this presentation is brought to you by Green Growth CPAs. Now, cannabis is still a new market, and with so much cash just changing hands during the course of doing normal everyday business, it's likely that operators will come across some type of fraud, embezzlement, or some type of financial misrepresentation at some point in the business. Now, investors and co-founders should be aware that just because you know somebody personally or have interacted with a certain business many times, that doesn't mean you aren't or won't be deceived at some point. Now, you want to learn how to spot the warning signs that something is amiss. So in this video, we're going to cover some warning signs that someone in your cannabis operation might be stealing or diverting cash out of the business in a deceptive way. But before we do, I need to let you know that the information contained in this presentation is meant for guidance purposes only and not as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general. So what we're going to cover in this video is first the key signs of theft or embezzlement in your cannabis company, and then what to do when things don't add up or when you spot something that is amiss in your cannabis business operation. So the first sign of theft or embezzlement. Now, if your company has cash flow issues, this could signal that there may be theft or embezzlement. Now, it's not uncommon for cannabis businesses to run into cash flow issues. We've talked about this extensively. However, if you're controlling costs and margins while hitting your revenue targets and you're still experiencing cash flow issues, then you need to find out where your leaky holes are within the business. You need to look for these types of signals to see if your cash flow issues are a sign of theft or fraud. Now, things like, does the same employee always ask to handle the cash personally and never ever let anybody else touch the cash or move the cash? Are there any unusually large or numerous credits being offered to a particular customer? Is it happening frequently? Also, are there duplicate payments being made to any particular business or any particular individual? Are there unexplained changes in your accounting records? Are there updates? Are there scratch outs? Are there very messy records in that sense? Why are these records being updated and unexplained? And lastly, is there a large number of payments being made to individuals with the same name or address? Now, we're not talking just payroll stuff, but is there a $4,726 check being sent out to an individual every month or every period or every quarter? Or whatever that is that you're looking at of the period of your financials, why is that happening? Now, it's not uncommon to have that, but just make sure that there's a note in your QuickBooks or in your Xero of why this is happening. Now, these questions can help you determine if an employee is manipulating your ledger or diverting funds into their own pocket. Strong accounting standard operating procedures can help you spot this problem quickly and make sure that it doesn't get to something much larger later down the road. Secondly, you need to check if your on-site cash reconciliation and records are a mess or non-existent. Now, in many cases of embezzlement that we've seen and come across, cash logs do not reconcile correctly against the daily POS reports, and that's point of sale reports, your cash register. Now, as a good standard practice, these POS reports must be produced every day. It's one of the only ways to spot a small problem before it becomes something much bigger. That's why we say every day, reconcile these things out. Because if you notice for 3 days straight that $300 is gone, all right, well, it's better to find it in 3 days instead of in 30 when now there's $3,000-$4,000 gone. Now, in addition to reconciling your POS reports against your cash logs, check your cash deposits. Now, the deposits that you put into your on-site or your off-site safe need to tie out to the amount of cash that is coming in through your business and what's on your cash logs. If the amount of cash in your safe is consistently under the recorded amount, then you have a problem on your hands, and that's not good. We don't want that. We don't want theft or diversion of cash. So you can check out our recent video of cash handling best practices to learn more about how to handle these types of situations and mitigate their impact on your business. We had about 10 suggestions of widely used cash handling procedures that can help mitigate the diversion of cash. Now, if you spot a discrepancy between the cash in your safe and the cash recorded, start by asking your manager to explain why the two amounts don't match up. Then, speak to the cashiers and see if they can explain to you what's happening. And if you don't get a satisfactory answer from either party, refer to your security cameras and watch a few days worth of till count-ins and till count-outs. That's where the till gets set on the table, it's being recorded, and they count out the change. There's $200 to start the till, and they come back in, there's $4,700 in there. So you want to look to make sure that that $200 in change plus whatever cash came into the business equals that amount at the end of the cash out. Now, you may be surprised at what you see, so be ready to take swift action. You cannot allow people to get away with this because you're sending a signal to the other employees that the manager or the owner doesn't really take this seriously. So when you find something amiss, you need to take swift action. Next, if your accounting or other records are completely disorganized or don't match, that could be a sign of theft or embezzlement. Now, in most companies, the CFO is responsible for keeping records of the finances, Chief Financial Officer. So, if your accounting records are totally disorganized, it's a red flag that your CFO or someone on the financial team is totally incompetent. So, first, find someone else to do that work. But worse off is that someone is trying to hide something. So, you want to start digging deeper. Disorganized records are an easy way for someone who's stealing to cover their tracks. Now, it's also important that the records tie up, meaning that, for example, on a balance sheet, your assets equal your liabilities plus your owner's equity. Now, if the financial statements don't tie, something's not good there. Now, other things to look out for: if no monthly P&L statements or balance sheets are being produced, then ask why that's happening. If critical documents are missing, such as contracts or master promissory notes, then why is that? If bank reconciliations have too many outstanding checks, why is that? If accounts receivables and accounts payables don't balance or make any sense, then why is that? If there are too many increases in past due accounts receivable, you need to look deeper into that. This is called accounts receivable aging. Now, if your accounts are getting older and older and older, say more accounts are becoming 30 days past due or more accounts are becoming 90 days past due, then why is that? And lastly, if customers are complaining about having already paid a bill and then receiving a second bill, then why is that happening? Is there someone trying to double charge so they can take that second charge and put it in their pocket? You need to look deeper into that. Now next, if you receive late tax payment notices unexpectedly, something's probably wrong. Now, many operators treat cannabis business taxes just like their personal taxes, meaning that they don't take it very seriously until late payments become a worst case scenario. Now, operators who embezzle funds from their cannabis business believe they can just take the money, miss a tax payment, and then make that up in their next filing. Now, it really doesn't work like that, and the penalties associated for not taking your taxes seriously can be quite expensive. For instance, the penalty for not paying your cannabis excise tax on time is 50% of the amount that you owed. So it's not uncommon to see an excise tax bill normally close to $200,000. Now, can you truly afford a 50% penalty and pay a $100,000 penalty? Probably not. So if your finance manager says that they're paying taxes on time, make sure you check and ask for receipts. Now, you also want to create an SOP or best practice so that tax payments are submitted early and not on the due date to mitigate any risks of late payment, especially if you have to mail things in and they have to be postmarked by a certain date. You don't want someone to say, oh, well, I got to the post office after they closed, or it's a holiday on the day it's due and they closed up, or whatever happened. You want to pay these things early. Don't hold on to the cash to the last minute. Try to pay a few days early, a few weeks early if you can, depending on what type of filing it is. Next, if you observe major upgrades in an employee's lifestyle that cannot be supported by their salary, then something is probably fishy. Or not, but let's talk about it. So, say an hourly employee buys a new Tesla, or a business partner buys a second home in Laguna Beach. Okay, this is something to catch your eye. Now, if you see dramatic changes in a colleague's spending habits that aren't supported by their income, just ask about their recent purchases, be intrigued by it, and see how the person explains it. It's always possible that their grandmother passed away and left them some large inheritance, or they had a trust, or they just crushed it in cryptocurrency. Now, it's also possible that they're stealing money from your cannabis operation. Now, some common warning signs that an employee is stealing is that they go on lavish vacations or pay for a lot of guests to join them on a basic vacation, or they have a lot of new toys, such as a fancy car, a boat, an ATV, or 4 of them, or that second home we talked about. Or maybe their husband or their wife or their fiance quit their job with no plans on getting a new one. Now, again, these are not telltale signs that someone is stealing, but they are big changes that may be worth paying attention to. Now, the last point I want to talk about here is that if the CEO, the partner, or the manager makes irrational hiring decisions that they call strategic. Now, when someone is stealing, they want to surround themselves with trusted individuals to help hide their theft. So watch for someone that makes hiring decisions without soliciting applications, without interviewing candidates very deeply with multiple rounds of interviews, or doing any sort of due diligence before expanding their team. If they're not calling any references, or if they're not running any background checks, especially if this is a financial or fiduciary type of position, that is a red flag. Now, be keen to observe the following, okay? Is your partner only hiring friends and family? Now, it's not bad to hire friends and family, but is the whole team friends and family? Next, do they fight to not fire someone who was clearly incompetent? Is someone just totally messing up their job duties, but the person you suspect is stealing is like, no, we have to keep this person on. We have to keep this person on. And their rationale just doesn't make sense. Or are they reluctant to hire an outside accountant or consultant for anything money or financial related? Or is there a vendor or manager that they're just too close to? It seems like this person is more involved with that other business or with that other employee than they are with their business partners. Now, you want to avoid any risk of nepotism and make sure your hiring decisions are based on talent and not connections or not any type of family friends type of thing. This is critical to having a great operation, period. You need to have the right people in place to build a valuable business, but also diversifying where people come from can help mitigate the risk of stealing or embezzlement or theft of cash. So now that you understand some of the warning signs, what do you do when things just don't add up? So what do you do if you find something that looks like embezzlement? Do you call the police? Do you call your investors? Do you call the suspected person out immediately in front of the entire team? So the first thing you should do is document all of these suspicious happenings and behaviors that you are observing. A simple list of things that caught your eye will do. Now, in addition, you want to create your own general ledger of money coming in and money going out of the business. This can help you provide a baseline to which the faulty or disorganized transaction records can be compared to. Now, if you're not a numbers person, this may be a little bit harder to do, but if you can do this, try to create your own little general ledger. Say, all right, we brought $2 million in revenue in, we put this much out in expenses, we should have this much left over. Now, that's what you can start to compare these faulty records to. Next, if you have the confidence and open communication with the suspected party or parties, then ask them to help you better understand these issues or these discrepancies. Now, don't come in accusing them of anything. They'll get defensive and they may shut down. And you don't want to do this, especially if you're not a numbers person. Just have them explain things to you and see how they react and what their responses are. Are they stumbling over their words? Are they getting flustered and frustrated? Or do they have rational thought patterns and it makes sense? Now, if you still have doubts and you don't trust what this person is saying, then hire an independent accountant to run an income and expense report and then create a P&L for your business. Now, if the person that's stealing is very reluctant to hire this person, that is an extreme red flag, because in most cases, the accountant or CPA that you bring in to run that P&L, that third-party stamp of approval P&L, will find some things missing and ask for backup documents to reconstruct your financial records. Now, if these records cannot be produced, then your final step is to pretty much hire a forensic accounting firm to do a deep scrub of your financials. And at this point, you're probably going to want to get your investors and your lawyers involved. Now, after the forensic accounting investigation goes on, it can take weeks, it could take months, depending on the scale of your business. Now, if that report comes back with some substantial evidence of a financial crime, some embezzlement, some theft, then you can reach out to the authorities or follow the advice of your legal team. Now, at this point, it's really up to you what to do, but you should probably follow what the advice of your legal team is. You're paying them to keep the business intact and follow their advice. You're paying for it, right? So hopefully this video has brought you some value and opened up your eyes and helped you to see maybe if these things are happening in your business, then maybe there's some theft or some embezzlement or some diversion of cash within the business. Now, if you need help with an accounting analysis or reconciliation or helping to create that third-party P&L, then please reach out to Green Growth CPAs via our website at greengrowthcpas.com or give us a call at 800-674-9050. We've helped a few of our clients dig into the financials, and sometimes it's just everything is messy and you don't have any theft or embezzlement. It's just bad, poor record keeping. Then you get on a better positive track. You can keep track of those financials and steer the business in the right direction. But we've also had the case where we found theft and embezzlement to the tunes of millions of dollars, and then you really have to go with that forensic investigation to truly quantify the amount, and then you proceed with whatever kind of things that the legal team wants you to do. So if you need help, again, with that accounting analysis, that P&L, that secondary reconciliation, then reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. Have a great day, and we'll talk to you soon.